Imagine buying $1 for just 50 cents, consistently for decades. That's value investing in a nutshell.
Today on Stock Fortress, we're uncovering the complete 100-year history that built legends like Warren Buffett.
Deep, authoritative financial historian. Stay with me.
The story begins in the roaring 1920s.
Then came the devastating 1929 stock market crash.
Benjamin Graham, once a successful investor, lost nearly everything.
That loss changed him forever. He vowed never to speculate again. Graham started teaching at Columbia Business School with David Dodd. In 1934, they published Security Analysis, the Bible of value investing.
They introduced the two most important ideas in investing.
Intrinsic value, what a business is truly worth, based on assets, earnings, and cash flow.
Margin of safety, always buy at a big discount to that true value.
This discount protects you when your analysis turns out wrong.
Value investing was born directly from the pain of the Great Depression.
These principles helped investors survive and thrive for the next century.
In 1949, Graham made value investing accessible to everyday people.
He published The Intelligent Investor, still recommended by Buffett today.
Inside this book is the most famous parable in investing history.
Mr. Market is a manic depressive business partner who offers wildly different prices every day.
When Mr. Market is depressed and fearful, that's when the best bargains appear.
Graham taught defensive investing rules for regular investors.
Deep, authoritative financial historian with subtle cinematic reverb and warm confidence. Speak at a brisk, engaging pace, steady momentum with no long pauses. Build quiet intensity on revelations. Punch key names, years, numbers. Deep, authoritative financial historian with subtle cinematic reverb and warm confidence. Speak at a brisk, engaging pace, steady momentum with no long pauses. Build quiet intensity on revelations. Punch key names, years.
This approach protected investors through wars, recessions, and bubbles. Graham's students would go on to become some of the greatest investors ever. The most famous of them all was Warren Buffett.
Buffett took Graham's teachings and evolved them further.
He moved from buying cheap cigar butt companies to buying wonderful businesses at fair prices.
Charlie Munger became Buffett's partner and added mental models.
Together, they transformed Berkshire Hathaway into a value investing powerhouse.
In 1984, Buffett gave his famous speech, The Super Investors of Graham and Doddsville.
He proved that value investors following Graham's principles crushed the market.
Other legends like Seth Klarman and Joel Greenblatt carried the torch forward.
Now, let's look at what academics discovered.
In the 1990s, Eugene Fama and Kenneth French created the three-factor model.
They proved value stocks outperform growth stocks over long periods.
The value premium averages around 4 to 5% per year.
Value crushed it after the dot-com bubble burst in the early 2000s.
Growth dominated from 2010 to 2024 thanks to low interest rates and tech. But signs of a value rotation appeared again in 2022 through 2026.
Modern value investing focuses on quality companies with strong moats. Not just cheap junk, but wonderful businesses at reasonable prices.
Deep, authoritative financial historians make it easy for regular investors. The same principles that survived the Depression still work in 2026.
Markets still overpay for exciting stories and underpay for boring, solid businesses. Patience and discipline remain the investor's greatest edge.
Value investing isn't dead. It's just out of fashion at times.
The greatest investors of all time have all been value investors at heart.
So, which are you? Value or growth investor? Drop your answer in the comments below.
If you want me to analyze a specific value stock next, just let me know.
Smash the like button if you learned something today.
Subscribe and hit the bell for more no BS stock history and analysis. Links to Graham's books and Buffett letters are in the description.
Thank you for watching Stock Fortress. Let's quickly recap everything we've covered in this history of value investing.
It all started with the 1929 crash and Great Depression. Graham and Dodd gave us security analysis and the core principles.
In 1949, the intelligent investor introduced Mr. Market.
Buy when Mr. Market is fearful. Buy the fear.
Warren Buffett evolved the strategy into wonderful companies at fair prices.
Welcome to Buffett Evolution. Let's see the journey. It starts here and grows through the decades.
The power of compound interest stupidity is a great advantage.
Exactly, a true evolution.
Academics confirmed it with the FAMA French model. The data clearly shows value beats growth. This is academic proof for value investing. Value stocks delivered a 4 to 5% annual premium. This premium is shown right here on our timeline. A consistent edge over the market. It's a powerful advantage. Even in 2026, the same principles still work today. So tell me in the comments, are you value or growth?